Over 60? The hidden truth about your retirement funds. They don't want you to know the truth about your retirement funds. For decades, you've worked hard, saved, and planned for the future, believing that when the time came, your money would be there for you. But what if the system isn't as secure as they claim? What if the very institutions you've trusted with your retirement are hiding critical information that could impact your financial stability? What if the money you've spent your entire life accumulating is at risk in ways you never imagined? They don't want you to know that your retirement funds are more vulnerable than you think. You've been told that your pension, Social Security, and 401k will provide a comfortable safety net. But the truth is, these systems are under pressure like never before. Government programs are strained, market volatility threatens investments, and inflation is rapidly eating away at the purchasing power of your savings. What you thought was enough to retire comfortably may not be enough at all. They don't want you to know that inflation is stealing your retirement wealth in real time. When you started saving, a dollar had far more value than it does today. The cost of living has skyrocketed, and even modest inflation can dramatically reduce the value of your nest egg. Food prices are rising. Healthcare costs are out of control. Housing expenses continue to climb. What was once a comfortable retirement fund is shrinking every single day. They don't want you to know that Social Security is not as secure as they make it seem. The program was designed decades ago when life expectancy was shorter and the workforce was larger. But today, more people are retiring than ever before, and fewer workers are paying into the system. Experts warn that without major changes, Social Security may not be able to pay full benefits in the coming decades. If you're counting on it to sustain you long-term, you may be in for a financial shock. They don't want you to know that your 401k and IRA are at the mercy of market crashes. You've been told to invest in stocks, bonds, and mutual funds for growth. But what happens when the market drops? Many retirees saw their savings slashed in half during financial crises in 2008 and 2020. If your money is tied to the stock market, your retirement is vulnerable to sudden economic downturns. One bad year could wipe out decades of savings. They don't want you to know that hidden fees are draining your retirement accounts. Financial institutions take a percentage of your earnings every year through administrative costs, management fees, and transaction charges. Even small fees can add up to tens or even hundreds of thousands of dollars over time. The money you thought was growing for your future is quietly being siphoned away. They don't want you to know that taxes can eat away at your retirement income. Many people assume they'll pay less in taxes when they retire, but in reality, you may be taxed more than ever. Withdrawals from traditional retirement accounts are taxed as income. Social Security benefits can be taxed depending on your total income. If tax rates rise in the future, you could lose a significant portion of your savings to the government. They don't want you to know that healthcare costs could be your biggest financial burden in retirement. Medicare does not cover everything, and out-of-pocket expenses for prescriptions, procedures, and long-term care can be staggering. Many seniors burn through their retirement savings just to cover medical bills. Without a plan, healthcare costs alone could drain your nest egg. They don't want you to know that long-term care can bankrupt you. Most people assume Medicare or insurance will cover nursing home or in-home care, but the reality is long-term care is one of the most expensive and overlooked costs of aging. Many families are forced to sell assets, cash out savings, or rely on Medicaid after losing everything. If you haven't factored in the cost of long-term care, your retirement plan may be dangerously incomplete. They don't want you to know that real estate can be both an asset and a trap. Your home is likely one of your biggest investments, but relying on it as your retirement plan can be risky. Property taxes, maintenance, and unexpected repairs can drain your savings. Selling your home for cash may seem like a good option, But downsizing doesn't always mean financial freedom. Many retirees end up spending more than they save when they move, leaving them with less money than they anticipated. They don't want you to know that working in retirement may not be optional. Many retirees return to work because they discover their savings aren't enough to maintain their lifestyle. Others find that part-time work is necessary just to keep up with rising costs. The idea of a leisurely retirement is fading as more seniors realize they must continue earning well beyond 60. They don't want you to know that alternative investments could be a better option. The traditional retirement system is built around Wall Street, but there are other ways to secure your wealth. Real estate investments, gold and silver, dividend-paying stocks, and annuities can provide more stable, long-term security than traditional stock market investments. But financial advisors often push mainstream options because they make money off of managing your accounts. They profit, whether you win or lose. They don't want you to know that downsizing your lifestyle now can secure your future. Many people continue spending at pre-retirement levels without realizing that small financial adjustments can add decades to their savings. Cutting unnecessary expenses, eliminating debt, and living below your means can help you stretch your retirement dollars further than you ever imagined. They don't want you to know that passing on wealth requires careful planning. If you want to leave an inheritance for your family, estate planning is crucial. Without a will, trust, or clear financial plan, your wealth could be lost to taxes, legal battles, or government seizure. Many families are devastated when they realize that the money their loved ones worked for is tied up in court or taken by creditors. They don't want you to know that the financial industry profits from keeping you in the dark. Banks, investment firms, and government programs need you to trust the system because they make money off your dependents. They don't want you to question where your money is going, how much you're truly earning, or whether there's a better way to secure your future. The less you know, the more they control your financial destiny. They don't want you to know that it's not too late to take control of your financial future. Whether you're 60, 70, or beyond, there are still smart moves you can make to protect your retirement. You can diversify your investments, reduce unnecessary expenses, seek financial education, and ensure your wealth is protected from market crashes and inflation. You are not powerless. You have options. You can make choices today that will impact your financial security for years to come. They don't want you to know that traditional retirement advice is outdated and designed for a different era. The financial strategies that worked 30 or 40 years ago no longer apply in today's volatile economy. The old idea of saving a lump sum, withdrawing a small percentage each year, and relying on Social Security no longer guarantees financial security. Pensions are disappearing, interest rates are unpredictable, and the cost of living is far higher than what most retirement plans were designed for. Relying on old financial models without adapting to current realities can leave you unprepared for the challenges ahead. They don't want you to know that debt can follow you into retirement, and even destroy it. Many retirees assume they can leave behind mortgages, credit card debt, and loans, but lenders have found new ways to keep seniors in debt. Rising medical bills, hidden fees, and high-interest credit can quickly trap retirees in a cycle of payments they never expected to make. Even reverse mortgages, which are marketed as financial lifelines, often come with fine print that can leave homeowners vulnerable. Without a clear debt elimination strategy, you could find yourself spending your golden years paying off interest instead of enjoying your hard-earned money. They don't want you to know that economic downturns can erase decades of savings in months. A market crash, inflation spike, or banking crisis can dramatically reduce the value of your investments overnight. What may seem like a stable financial plan today can quickly unravel due to forces outside your control. Government bailouts and financial fixes rarely help the average retiree. Instead, they often protect banks and corporations while leaving everyday people struggling. If your wealth is tied up in traditional investments without protection against economic instability, you could find yourself losing more than you ever imagined. They don't want you to know that the cost of caregiving could deplete your assets. Many seniors assume they won't need significant medical care, but the reality is that long-term care is one of the biggest financial burdens in retirement. Whether it's home health aides, assisted living, or skilled nursing care, these expenses add up quickly. If you haven't planned for caregiving costs, either for yourself or for a spouse, you could be forced to liquidate assets, drain your savings, or rely on Medicaid after losing nearly everything. They don't want you to know that relying on family for financial support is becoming increasingly difficult. While past generations could count on children or extended relatives to provide care and assistance in old age, today's economic realities have changed. Many younger people are struggling with student loan debt, rising housing costs, and stagnant wages, making it harder for them to financially support aging parents. If you're assuming that family will step in during financial hardship, you could be putting both yourself and your loved ones in a difficult situation. They don't want you to know that retirement scams are targeting seniors more than ever. Fraudsters are preying on retirees with promises of high investment returns, government grant programs, and fake Social Security benefits. Financial scams are becoming more sophisticated, using technology and AI-driven deception to steal savings before seniors even realize they've been targeted. If you're not actively protecting your assets and staying vigilant against fraud, you could unknowingly hand over your retirement funds to criminals who specialize in exploiting financial fears. They don't want you to know that downsizing is not always the financial solution it seems to be. Selling your home and moving into a smaller place might sound like a great way to free up cash, but hidden costs can eat away at the profit. Closing costs, moving expenses, homeowners association, HOA, fees, property taxes, and unexpected repairs in a new home can turn downsizing into a financial trap rather than a relief. Without careful planning, downsizing can actually cost you more than staying in place. They don't want you to know that tax laws can change unexpectedly, wiping out parts of your retirement strategy. Governments are constantly adjusting tax policies, and what may be tax-free or tax-deferred today might not be in the future. Social Security benefits could be taxed at higher rates. Required minimum distributions, RMDs, could increase, forcing you to withdraw more and pay more in taxes. Estate taxes could rise, reducing what you're able to leave behind. If you're not keeping up with tax law changes, you could be blindsided by financial losses that you never planned for. They don't want you to know that charitable giving and legacy planning can help secure your financial future. Many retirees assume that giving to charity or setting up a trust is only for the ultra-wealthy, but these financial strategies can actually reduce tax burdens, protect your estate, and provide a long-term impact for causes you care about. With the right financial guidance, strategic giving can maximize your retirement income while securing your legacy for future generations. They don't want you to know that you may be able to negotiate better healthcare rates. Many people accept rising medical costs as inevitable, but in reality, healthcare pricing is not always fixed. Hospitals, doctors, and insurance providers often have flexible pricing structures that can be negotiated. Whether it's asking for a cash pay discount, appealing medical bills, or using medical tourism for procedures, there are ways to reduce healthcare costs without sacrificing quality. If you're not actively seeking better pricing, you could be overpaying for medical expenses without realizing it. They don't want you to know that real estate investing can provide more financial stability than traditional retirement accounts. While stocks and bonds are commonly recommended for retirement, real estate offers tangible assets that appreciate over time and provide passive income. Rental properties, REITs, real estate investment trusts, and other real estate investments can offer cash flow that keeps up with inflation, something many retirees struggle to achieve with traditional investment portfolios. If you've only been told to rely on stocks, you may be missing out on one of the most effective ways to build long-term wealth. They don't want you to know that part-time work or side income can be a financial safety net without sacrificing freedom. Many retirees think that returning to work means losing their independence, but a part-time business, consulting, or even monetizing a hobby can provide financial stability while keeping you engaged. Side income streams such as freelancing, online businesses, or rental income can supplement your savings and provide peace of mind without requiring a full-time commitment. They don't want you to know that financial literacy is your greatest weapon against uncertainty. Retirement planning doesn't end when you stop working. It requires ongoing education and adaptation. The world is changing, and understanding your finances, investments, and legal protections is the key to making sure you never run out of money. Many people assume financial planning is only for the wealthy, but in reality, the more informed you are, the better you can secure your assets, reduce risks, and make strategic decisions that protect your future. They don't want you to know that retirement is not about surviving, it's about thriving. The system is designed to make you think small, to convince you that your golden years should be spent just getting by, when in reality, this is your time to live fully, embrace new experiences, and enjoy the rewards of a lifetime of work. Retirement should not be about fear, restriction, or dependence. It should be about freedom, confidence, and financial security. But that only happens if you take control of your own future instead of trusting a system that was never designed to fully support you. They don't want you to know that your financial destiny is in your hands. The greatest financial decision you will make is whether you remain passive or take action. The truth is, you have the power to secure your retirement, protect your assets, and create a future where you are financially independent. The more you educate yourself, the more you challenge the system, and the more you take steps to control your wealth rather than letting it control you, the greater your chances of living the retirement you truly deserve.